afternoon, everyone. Thanks for joining us today. We have a presentation with Anaconda Mining. They put out their feasibility study on Goldboro this morning, so this session will mostly just cover that. If you'd like to know more about Anaconda, there are other webinars that go over the full story on the Adelaide Capital YouTube channel, so feel free to check those out. As always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And there will be a Q&A section for most of the session, so feel free to input any Q&A that you have at the bottom of your screen. There's a Q&A box. With that out of the way, I'd like to introduce Kevin Bullock, CEO of Anaconda. Congratulations on the study this morning, Kevin.
Thanks very much, Deb. We're excited and encouraged by the results that we have on this feasibility study. In fact, it actually surpassed what we were expecting from the PEA that we did 7 months ago to what it is now on the open pit portion of it. I just want to remind viewers and shareholders and stakeholders that this is simply the feasibility study only on the open pit phase of the project, but we do plan to still develop the overall project as was in the original PEA, which means we would like to start developing the underground in around year 6 to have it a combined open pit underground project. But since the resources underground are made up of 50% inferred, that cannot be used in a feasibility study until they're upgraded to measured and indicated. So we've chosen to, instead of raising a lot of money at a depressed share price, to drill the underground and take another year or so, showing that this is a 10-year plus project of open pit alone is financeable. So it makes much more sense for us and a better use of capital to raise funds to drill the underground resources once we have cash flow from the open pit mine, and then designing an underground mine based on a few years of open pit mining and really seeing the deposit in 3D and understanding it, rather than designing something based on small drill holes that size, will give us an advantage as well of designing the underground properly and then bringing it into play years down the road. So we think this will be a project that has a long mine life, much longer than we're showing here, because this is only the first phase of the project as a whole. So I think that some of the study results that I'm showing here on the screen, the initial capital to build this has actually come down from a PEA. I'm sure that there are people on the line that have not seen this before. Usually it's something that goes up. We were very conservative with our PEA. A comment on the average gold recovery at 95.8%. It was 96.4 in the PEA, but it's a recovery curve, and not having the underground higher grade ounces just has the recovery go down a bit on the lower grade portion of the open pit. Still a great recovery. It's a 10.9 year mine life of 100,000 ounces a year on average. So fantastic. The PEA was showing about 87,000 ounces from the pits, so that's gone up as well. The grade is higher, the IRR is higher, and the NPV obviously is not the same number as the PEA, and it hasn't gone down. It's just the underground portion of that is deferred till the phase 2 program. We still have fantastic operating and all-in costs for this project at $773 cash costs and $849 all-in sustaining costs. These are numbers that I would think that any large or mid-tier company would like to see in the lower end of the range of average cost. So it's a very, very robust project in a fantastic jurisdiction, Canada, in Nova Scotia. And the area itself is a very, very subdued area. There's not much going on there. It's a swampy area. There aren't any tourist attractions or spots. There aren't many people there nearby. There's nobody within the footprint to move. It's highway all the way to close to the deposit itself. And as some people do know, this is a past producer as well. So there's a history of mining in the area. So it makes for a project that can be permitted. It's a reasonable capital cost for a company our size. So we're very, very excited about the potential of moving this forward and getting the mine into production, and then adding the underground portion to it as a project overall, which will create much more value.
Kevin, can you walk us through some of the permitting milestones?
Yeah, so with the feasibility done now, as we promised to have by the end of the year, we now can formulate and put together our environmental assessment registration document. We are going to deposit that to the government agencies in May, once we have our water balances done and some more pump tests to really define the project to government. So that should go in the second quarter of next year. And then it's about an 18-month process to get final permits, to go through several reviews of question and answer periods and open houses for people's input. And that whole period lasts about 18 months. So this will be the next mine built in Nova Scotia, the next gold mine.
So you're looking at potentially getting your permitting done by the end of 2023?
Correct.
And then maybe you can walk us through a little bit about, I know the underground resources were excluded from the feasibility study. Maybe you can walk us through what your plans would be for the underground portion eventually?
Yeah, absolutely. So the plan will be very similar to what the PEA suggested that was filed 7 months ago, in that we would start developing the underground resource from within some of the benches of the open pits. So the portals and the vent fans, noise and dust would all be out of sight down within the pits. That obviously brings us closer to the ore and therefore less of a ramp to drive. It gives us time while we're open pit mining to drill off the underground and understand it better. And then the development would take place around year 6, which gets us to a point whereby it would take approximately 1.5 to 2 years to develop the underground and start stoping. And then we can do about 1,800 tons a day from underground. So it would change to the underground resource is actually over 6 grams per ton, whereas the surface is 2.8 grams. So what would happen is you'd go 1,800 tons a day through the 4,000 ton a day plant from underground, and the remainder, the other 2,200, would come from open pit. So the grade would actually go up and the ounce profile would go up. But we've got to prove that. We've got to drill off the underground inferred resources, upgrade them, and do a second phase feasibility a few years down the road from now.
Got it. And I have a couple questions just about market reaction being very muted today. And what's your explanation about the share price being so low after all this work that you've done at Goldboro?
I think it's, there's a lot of excuses I could come up with, but reality is it's the time of year. There's tax loss selling. There's people, there's groups and people who are trying to have something off the books by the end of the year for ratings. But quite honestly, it hasn't been, it's been flat as far as share price goes, but liquidity, I mean, we've traded close to 1 million shares yesterday and today. And I think that the liquidity will continue and we're changing hands into stronger holders. And I think then the share price will move accordingly. But at the moment, there's changes of hands and it's just the time of year and it's a soft market.
Mm-hmm. Well, as we discussed earlier, anytime anyone's putting out news right now, it does seem like it's just a selling event for investors.
Yeah, and that's fine. I think that what we've proven here with the feasibility study is that we do have a very robust project. And as we continue to get over the hurdles and tick the boxes of permitting and moving closer to production and de-risking the project, that the value will move closer to what it really should be, which, as you can see from a after-tax NPV at $1,600 gold, 328 million. Actually, at today's price of gold, it's close to 500 million and over 30% IRR. So it's a very valuable project in a great jurisdiction, and people will understand that as we move forward and get into the new year, and we're through this holiday season, tax loss selling, end of the year blues.
For sure, and I think jurisdiction is really important. I mean, most of the M&A that we've seen of late has been domestic or at least North America focused.
That's correct, and we'll get through this. This will move towards getting through its de-risking, and the share price should follow.
Is your intention to continue moving the project forward and construct it yourself?
Absolutely. I mean, if you look at this and you look at it as if it was in production, with the production scenario, we have 100,000 ounces a year, and these costs, once in production, you're no longer looking at a discounted NPV. You're actually looking at cash flow per share and profitability, and that's when this really, ticks all the boxes for an increased share price. And I would urge people to look at the analyst reports that either have or will be coming out based on this feasibility, and look at the target prices that they'll be having for that type of scenario.
Can you remind me how many analysts cover you currently?
We have 3 currently, M Partners, Beacon Group, and Spry.
Okay, great. And in terms of marketing efforts and things like that, have you been finding that you're getting more traction with the institutions?
We certainly are. When I started 2.5 years ago, we had about a 7 or 8% institutional holding, and we're now just moving through 22%. So there's definitely more eyes on the story. And I think next year, when everybody gets back into it again and starts seeing the reality of this feasibility study and the financeability of the project in its jurisdiction, we'll see that increase as well.
And talking about the financeability, how would you intend to fund the construction?
We're looking at a traditional debt equity scenario whereby, depending on the share price, obviously, we could get up to a 60 or 70% debt ratio to 30 or 40%, to 20 or 30%, 30 or 40% equity. But obviously, if our share price starts doing what I think it would do, based on reality for this type of project, it would be nice to get a 60-40 split and do it just a traditional debt equity finance, project finance.
And then going back to the production profile, are there any higher grades of production at the start? Is there any way to kind of phase lower cost production into the beginning, or how are you looking to mine?
Actually, the first 3 years of production are quite good, and we start in relatively good grade, and then the second year is better than the first, and the third year is better than the second, and then we have a couple of lower grade years in years 4 and 5, and then 2 pretty good years in 6 and 7, and that's when we would use the cash flow to develop the underground.
Okay.
But so it ranges between 90 and 115,000 ounces a year, depending on the year, but it averages out just over 100,000 ounces a year. So there's 1.15 million ounces recovered in 11 years, so a little over 100,000 ounces a year.
Well, I think it was 2 years ago when we were first talking. I think you had recently taken over as CEO of Anaconda. I think your production profile was somewhere around 15,000 ounces a year, and you were talking about making this into 130 to 150,000 ounce producer a year. And I think a lot of people thought you were crazy, but clearly with this study, you can certainly get there.
Well, they were right and they were wrong. I am crazy, but I think this can get us there, and it's certainly showing that we can be well on our way with the open pit portion, and we would actually be there once we put the underground into play.
Okay, and I know this session is mostly focused on Goldboro, but maybe you can give us a little bit of an update on Point Rousse.
Sure. Point Rousse, we had a difficult year in starting a new small satellite deposit called Argyle, where we had our growing pains and some issues like you do in any open pit when you first start till you figure it out. I can say that we're now into the heart of the ore body at Argyle, and the numbers are starting to look good and creeping up. And I think that next year is going to be a very, very good year for us at Point Rousse with the Argyle mine.
Are you offering any guidance?
No, not yet, but we will be once budgets are approved and we have the mine plan finalized over the next couple of months.
Okay, great. And then other catalysts that investors can look for going forward. You talked about the permitting process. What other things are you going to be doing at Goldboro?
Well, we're currently infill drilling on some of the underground resources that are closer to surface. Some of the viewers might recall that we have 2 open pits that are separated by a lake, and therefore just underneath that lake and river are some resources that are considered underground but quite close to surface. So we've been drilling those, and we'll announce results as they come. But what's really exciting us, if I can go to this map here, is you can see the 2 elongated pits that are separated by the lake and the river. Those are what the open pit, exhausted open pit outline would be once exhausted. And you can also see a VLF conductor that goes through that and to the west for another almost 2 kilometers to another past producing mine from the late 1800s, which is the same era as Goldboro, called Dolliver Mountain. And the trend continues, and we haven't drilled that yet. So we've got permits submitted whereby it'll allow us to do an IP survey to really pinpoint the targets that are west of our 2 pits and start drilling. So while we're permitting and going through the process of environmental studies of permitting and development to get the 2 pits going on the eastern side of our property, we've got the same strike length to the west. So we now are all combined, including inferred resources. We are well through 3 million ounces on the east side of our project. I would bet there's a lot of upside to the west, and we haven't drilled that yet. So that'll be a lot of excitement in drilling next year.
Do you have a timeline for drilling at Dolliver Mountain?
We don't, because we don't have the permits yet, but we're expecting them over the next few weeks. So we'll start drilling there in the first quarter next year.
And you mentioned that you haven't set your budget yet. Do you know approximately how many meters you're going to be drilling in that area?
We have about a $4.5 million program outlined, which includes the IP survey and drilling, and that's just initial testing. So obviously, if we hit something, we would increase that budget and go out and raise more flow-through dollars to really attack what's possibly more open pitable ounces.
Okay. And another audience question, the recoveries seem very good. Is the process route fairly simple or standard?
It's very, very simple. It's a gravity circuit followed by a CIP circuit. So it's your typical circuits that have been used for many, many years. We expect to get somewhere between 35 and 40% of the gold through the gravity circuit, and the rest would be carbon in pulp, pouring a doré bar at the end. So the recovery curve, as I said, is a formula based on grade, and as the grade gets better, the actual recovery gets better. But even down at the open pit grade that we're at for the average for this mine, it's 95.8% recovery. So very, very easy to liberate the gold in this particular deposit. And I think that the gravity portion that we'll get out prior to going CIP gives us quite a nice milling cost, processing cost.
Got it. I don't see any other audience questions, and I don't have any left myself. One thing that we didn't mention, Kevin, is a bit of background on yourself, because I think it's very relevant to the story. Maybe you could talk about some of your past successes and your professional history.
Sure, thanks, Deb. I've been in the industry a long time. I started as an actual underground miner in the mid-'80s. Eventually got my engineering degree and worked through operations for a while, and then got onto the business end of mining in about the mid-'90s. I was asked by a private company to move to West Africa in 1994 to run West Africa for them, and that was a private company called IAMGOLD, which went public the next year, or we took public the next year. And that's been quite successful over the years from the work over there. I came back at the request of a couple of individuals that asked me to find an asset for their shell called Fox Point Resources. I ended up negotiating or helping the team negotiate the purchase of the Macassa mine in Kirkland Lake, and I moved up there to reopen it. And we changed that name to Kirkland Lake Gold, and that's had a few iterations since, but it's been very, very successful, as everybody probably knows. And then I started my own company called Verte Resources, which drilled off the largest gold deposit at the time in West Africa. And our company was acquired by B2Gold in 2012 for that asset. And B2Gold is now a million ounce a year producer and been quite successful. And I'm continue to be on the board of that company as well as a result of that transaction. And I just saw an opportunity at Anaconda with the assets that they had to have the next company that I thought that with the right team, we could really move forward and create value. And certainly we're starting to see the benefits of what we've done so far of moving Goldboro forward to something that we originally thought was a small underground mine to something that's quite a robust open pit project. that will have an underground portion to it later on.
I think it's interesting that you both have M&A experience as well as experience putting mines into production. A lot of people in your position that are geologists, et cetera, come from a pure exploration background. So it's good to see management has the skills necessary to take the project forward on either route.
Yeah, and also, having 10 years of operating, 10 years of operation in Newfoundland on the East Coast, we've got quite a good development team that's been helping with this, understanding this feasibility as it relates to reality in mining in Eastern Canada. So it's great to have a good operating team, and obviously the management team here has a history of building mines and adding value. So we're in a good spot. We're executing on our plan to be that 150,000 ounce a year producer, and then we'll come up with our new plan to grow that.
Great. Well, thank you very much. Congratulations on the feasibility study. If anyone has any questions that didn't get answered, I see one just came in. Oh, I just got a question about your board. Maybe you could run through some of the board members that you have.
Yeah, well, that's a great question, and happy to answer that because we've just had 2 additions to our board. So I'm on the board myself. Our chairman is Jonathan Fitzgerald, who was the CEO of OREX that held this asset in the past that we purchased, and he's been instrumental in helping us move forward through the OREX transition into Anaconda. Lou Lorick, who is one of the founding members of Anaconda, who's a capital markets person, has been here from the beginning at Anaconda and kind of got that project going in Newfoundland. And then we have Marilyn Oki, who has a history of several positions at Baie. Very, very good at what she does on the financial end, but also understanding mining, who has helped us tremendously on our board. And then the 2 new additions, Ted Kavanagh, who has spent years doing financings, been involved in financings from the side of the banking side at SocGen and Standard Bank South Africa. A lot of history in deals that'll help us with our project finance going forward. And then Rick Howes, that we just announced last week, who's built mines and been involved in project, is very well respected and well known in industry from the engineering and mining side. Will help us as we get through to moving this towards development.
Well, it seems like you've got a good board and strong governance and a good management team. And once again, I don't see any other questions, so I think we can leave it off there. Thank you for your time. Thanks everyone for participating. Looking forward to seeing some of the catalysts, some of the drill results, etc., coming out in the new year. And yeah, Kevin, congrats.
Thanks very much, Deb.